Thank you very much indeed. And we've got a strict 25-minute limit, so we'll attempt to be, smart in our use of time. Now, Dave is a New Zealand merino breeder. Frank Vence is he's worked for, no, actually I'm losing you. Yes, you're the CEO and founder of Vence Corp. Is that correct? That's you. A company reinventing the way livestock is managed by removing the need for fences and reducing labour needs on farms. Dave Maslin is the General Manager for Markets and Sustainability at New Zealand Merino, and he's an advocate for sustainability in the wool industry, and he's been instrumental in bringing the largest supply of ethically sourced wool to the world. He's responsible for New Zealand Merino's key international relationships with retail brand partners and supply chain partners. RORY LONERGAN is Director of Corporate and Project Finance at the Clean Energy Finance Corporation, which is one of the heroes of our little world, I think. I've always thought that. I have for quite a while, and I've done interviews on precisely that, having fought against the odds to survive. RORY works with a range of third-party fund managers across multiple sectors, and I think many of you may know it's responsible for investing $10 billion in clean energy projects on behalf of the Australian government, the goal being to lower Australia's carbon emissions by investing in renewable energy, energy efficiency and low emissions technologies. And Roy's set up listed and unlisted funds both in Australia and offshore. And Emma Higgins is a dairy analyst from Rabobank Research in New Zealand. That's got 12 analysts attached to it, and they look at developments in food and agricultural markets and industries. And I'm particularly going to be interested to follow up some of the issues that Nick raised, which I thought were very challenging indeed. So welcome to you all, and I'll just watch my time. So let's talk, given that we've been asked to consider about how much the ag industry is ready to change, and if I heard Nick correctly, I thought Nick was fundamentally saying the industry is ready, and we've seen that in all the snapshots, to take up all of this wonderful technology for better production of existing foods. Now, I mean, I'm generalising, I know that's not completely right, but what he was saying to me, or the big challenge was, is the industry looking at where the consumer is heading, even trying to be ahead of the consumer in thinking about this? And I think he was saying that no. How do you see it, Emma?
Yeah, and this is certainly the issue that, particularly in the dairy space, if I can speak to that, that's the issue that we've been trying to work through over the last wee while.
Can you just sit back a little bit so that people down there
sure.
can sort of see?
Sorry, guys. So, yeah, look, the issues in New Zealand are a little bit complex around the dairy scene, because what we've seen over a number of years is essentially tightening regulation on the environment front, and that's forcing a higher cost of production onto our farmers. The real key issue here is trying to obtain a premium for our product now in order to pay for those higher costs of production. Because, as my colleague Nick pointed out, the consumer certainly is driving demand and is pushing production in one certain direction, and the challenge now is to really capture that premium.
And, I mean, Rory, speaking from, because you've got this interesting perspective, I suppose, of sitting back and looking. Do you see sufficient adaptability? I mean, how long is a piece of string? I know that's a hard question, but yeah, can you see a propensity towards it or not?
Yeah, no, I think there is. I think farmers are generally very entrepreneurial. I think they do have our interactions with the farming community show they have an appetite to take up new technology, and new technology is a win-win in terms of it increases productivity, but generally what it also does is it tends to decrease inputs into the farming process, which is, reduce fertilizers, reduce insecticides, etc. And from the particular lens that we look at it, you look downstream, and that's less energy to produce all of those fertilizers, natural gas, less emissions, etc. So I think farmers are very much on board with all of that, and are keen in terms of financing solutions and adoption. I think they are early adopters.
But that's not really what Nick was saying, was it? He was really throwing down, I'm sure he was being slightly provocative, but he was really saying, I think, and it's not just, I mean, the farmer said, that story about the food companies was totally fascinating.
Yeah. I mean, when we look at farmers over the journey that we've been on, our 6 years, so we've lent roughly $850 million into the ag sector at the individual farmer level in many cases, and they've taken up all sorts of technology, variable speed drives, solar heating, waste to energy, everything.
And they're not resistant.
They're not resistant if they're shown the investment case, if they're shown that the payback periods are there. In many cases, the payback periods are actually quite short for these what are now proven technologies. So I think absolutely they are, if the investment case is shown to them.
And Dave, you're Dave, aren't you? Yes. No, you're Dave. Sorry. So Dave, how do you see it? Do you think that, my question about whether there's appropriate R&D, I mean, that's really what he was saying. There might be adaptability, but is there research and development in all that implies?
I think there's a lot of R&D that's occurring. Whether that R&D is truly aligned to what it is our consumers are asking for, that's another very big question indeed. And if I could be critical of the ag sector, recognising the room that I'm in, it's that the fundamental disconnect between consumer and producer is only widening. And so a big theme today has been about disruption, and the way you get disrupted is by not being aware of what's going on around us. And so while I think there is exceptional R&D that is occurring, whether or not it's the R&D that we actually need for our industry to drive it forward in the eyes of the consumer is another big question. It's also how we commercialise that R&D. Do we have the businesses that are willing and have the capability and talent, and are we producing that talent in our educational institutes to take our primary produce to the market and make best use of that new technology and so forth?
And in your experience, and I'll ask Frank this too, are there particular size farmers and producers who are more inclined to do that than others?
In my experience, no. I mean, we get innovation and disruptive growers at all ends of the spectrum in New Zealand anyway. So right from relatively small growers that are trying to take their product to the market off their own back, right through the very large corporate entities saying, you know what, ROI to us is absolutely fundamental to our business. We want to see exactly where our product is going. We want confidence and certainty in the markets that it's going to. So, they charge organisations like ours to find them market opportunities. We do that by, I guess, dotting the supply chain back to where they are and customising their primary produce to that consumer market, using R&D, using technology, and importantly, using those consumer insights.
Like that whole story of the gluten-free, I could just see that, that it'd be very easy to have said a few years back, oh, this is a fad. I said it. So, I mean, and it's not.
No,
it's clearly not. That's a very good little...
It's the new normal.
It's the new normal,
yeah.
So, Frank, how do you see it in terms of preparedness?
I mean, I think your last question was whether or not there's a difference in customers and their willingness to adopt technology. And I would say, on our end, the conversation is much easier for somebody who knows what a quick return on investment is going to be for them. And I would say it's also differentiated on the size of the customer. Doesn't mean they don't know their costs well. It just means they have a drastically different cost structure. And our offering may offer them a different return, and it varies, based on whether it's an extremely large-scale farm that needs helicopters to muster and reducing the cost of mustering, or it's the fact that you've got a couple who's been managing 7,000 head of cattle alone for 10 years and haven't had a vacation. Right? There's a return of lifestyle for that person in addition to the financial return, which is actually ranked higher than what it might be for a corporate. So I think that the adoption, we see pull, right? We see dramatic pull on it. It's more whether the business models actually create a quick enough return for that customer to see it in their cash flow cycle. And that matching up with the R&D cycle is actually very challenging, because it's really hard to build a product that works in the paddock for 5 years and it isn't going to break down. It's going to cost any company, us included, $5 million to build a product before we see a single dollar of return. And to get there, you've got to spend a lot of time and a lot of effort, and you got to have a lot of vision and believe that it's going to pan out.
Yes, sorry.
No, I was just going to say, and fundamentally, you could have a lot of confidence that you've got a consumer that's willing to pay for that in the long term. And so having value chains that are wired to appreciate that additional value is absolutely critical.
You must have had some, well, I'll ask you, have you had some real duds that you have bet on that haven't, I mean, that's a lot of money.
Some real duds in terms of rabbit holes we've gone down.
Yes.
There were not great ones.
Yes.
Some of my investors are in this room, so I don't know how to answer that politically correctly. But that's part of R&D, right? There's a science aspect to developing something new. Whether or not you can transform that learning into something that's really valuable and differentiates you is, I think, the key between success and failure. And it's going to be what we hope differentiates us from anybody else in what we're doing.
Dare I ask you for one more anecdote, if you have it? I mean, what was a good story? A story that surprised, in a sense, when you stood back and looked at it. Because I find this so interesting, how people judge these things, how entrepreneurs judge this. I really do. I think it's so working out how they've spotted something.
Yeah, I mean, I think that when we started to look at what we were solving, it took us probably 7 months to realize that we weren't solving out of the gates an animal behavior issue. We were solving a communications issue, which then had an animal behavior and management layer on top of it. And that has driven how we have built the company. Right. So
it's the whole fences, the use of fences issue.
Yeah, well, and it's actually the fact that we're dealing with communications-constrained environments. Like the farm is not in general, is not a very high. They're remote and they don't have communications over their whole landscape. And so we had to solve something that was a affordable communications infrastructure before we could actually even start to solve the problem that we had set out to solve.
I mean, I presume, Rory, you have to. This is what you've got to try to assess, do you? If people, or do they tend to come to you from the sector and elsewhere with made solutions, or are you dealing with this sort of judgment?
It's a real mixture. On the technology side, we see early stage companies, venture capital style companies. Either we find them or they find us. There are different pathways. We have a sufficient profile now that, at least in the Australian environment, a lot of the tech startup companies tend to know who we are, and they come looking for us. So, and then, like every, we have an allocation to venture capital, and like every other venture capital investor, it's a matter of, trying to pick the one that you want to back.
So what do because I've talked to people over the years who've wrung their hands at the lack of big venture capital in this sector, absolutely screaming for more interest and can't work out why they can't persuade people. And I've talked to fund managers who say it's not there yet and I'm not sure it'll ever be. So, I mean, how do you manage, well, do you think that there will be big new money coming in, and when?
I think, yes, I think there will continue to be a supply of money. I think one of the problems that we are trying to address in the venture capital sector generally across all of the energy landscape, not just agriculture, is there are gaps in the evolution, in the funding evolution of companies. There is money at the seed or the angel investor when people are looking for $50,000 or $100,000. Then they move on to the next stage where they're still pre-commercialization. That's possibly where one of the large gaps are. And then at the private equity stage, once it's all proven up, then there is greater access. So it's a matter of trying to plug all of those gaps along the life cycle of the development of one of these technologies. And I think that's probably why a lot of them end up going offshore, because they get to a certain point and then there's a funding gap. So we see that as one of our objectives, is to plug those funding gaps along the way to get them through the next stage, so that companies get through the so-called valley of death which is 1 to 2 years after they've been set up.
Is there a sort of classic mistake that people make trying to pitch to potential funders?
Oh, it's a question to me.
Yes, you.
I think the classic mistake is not a mistake, right? It's a reflection of sort of where these companies from. So very often they come from, some very clever people who've come up with a very clever idea. Then they're suddenly locked in a room with the only person in this entire room who's wearing a tie type person. And it's a matter of how do they present to that different audience, to what they're used to. Then it's a matter of, I think, realizing that as a company evolves over time, it takes different skill sets. So the person who had the idea initially, and I'm wandering way into the venture capital space, which is not necessarily my thing, but the person who originally came up with the idea on the whiteboard is possibly not the person who listed on the NASDAQ at the end of the day.
Have you got any thoughts about this, Frank? That's a very interesting observation about sort of completely different sensibility groups, I suppose. And when you're sitting there like that,
I think that there are two things. If you look at the quote funding gap, one, most of these technologies haven't been affordable to deploy in a commercialized fashion until post the iPhone era. So we're not talking about actually a dramatically long period of time. We can complain about it, but it's 10 years. So one, venture funding in Silicon Valley, as it's known, is from the 70s, right? And it's based on the silicon chip. That's largely a mature industry. You're talking about a new sector where people are wanting them to deploy capital. And I would say if you look at most investment trends, they're kind of like cattle, right? They follow the herd. And right now, recently there have been, but historically there have not been many large exits in the ag sector. There have been a handful. One was 5 years ago, and most recently, Antelic was bought by private equity, which is the biggest transaction, in the space. Versus you look at general technology, and you wonder why people want to invest more. It's because there are every company that's at the top of the largest traded companies in the world is a technology company which was built in the last 50 years and invested via venture capital. I think that the one thing that has happened for lack of funding has been also the lack of, I would say, coherence with the customer business model, right? 5 years ago, people invested in some ag tech companies, but it was, a lot of guys in suits who said, "Hey, we're gonna take a technology solution and give it to these farmers. They don't understand anything, right? They don't understand their business model. We understand how we can do it better." Versus, now all those investors are saying, "Where's your traction? What are customers saying about this, and who on your team understands the problem from the ground up?" And so I actually think it's really positive. We're at like a positive inflection point of what we'll see funding-wise there.
Yes, but okay.
You can disagree.
Well, no. I'm listening with great interest because it could also be that they haven't learned to trust each other. If they're at, it's an inflection point, yes, but it's also a bit of a disjuncture, isn't it? You'd think in that time they would have learned more from each other. That's how I hear it.
The investors or the founders?
Both. The investors and the farmers. They would have.
The investors are waiting for returns.
Oh,
right?
they haven't got. I see.
So they need
small problem.
They need some evidence that,
right.
That's sticking.
Yes.
$50 million is going to return them some decent money. And
that's absolutely true. And the investors in private equity, venture capital investors, have done very well in other sectors like fintech, biosciences, etc. So I think there is still a fair element of I can put my money in there, and there have been known exits. The probabilities are easier to understand.
Okay, Dave, your thoughts on this?
It's not an area I've had an awful lot to do with, but I would say the brands that we've been involved with that have sought to raise funds, types of funds they've raised have been driven by organisations that are seeking to invest in as much the purpose of the business as it is the product itself. So obviously they want a return on their investment, but they want a return on their investment in a brand that's actually going to do good. And that might just be because of the microcosm of the community that our products tend to fall into, but that's one observation that we've made. So it's sort of this purpose beyond product.
That's very
concept.
interesting. So they're social impact investors in
Absolutely.
a way. Right.
Yeah.
They've got big money, have they?
And they're seeking brands and business opportunities that will deliver value beyond just a return on capital in a traditional sense, but one that has social capital associated as well.
Okay. So what about sustainability? Like, just again, Nick's challenge and Toby talking too about trying to see things down the line. Now, the whole animal welfare story, which would seem to me to be there knocking on everybody's door as something I don't think is going to go away. I wonder, Emma, whether this is something that you see New Zealand farmers consciously engaging with, or is it a too hard basket?
Oh, absolutely. I think sustainability challenges at that farm gate level, animal welfare is one of them, and our New Zealand farmers are very conscious of that. A number of other environmental sustainability issues are also at the forefront. There's been a lot of uptake in technology, and we've seen that with some of these videos that have come out. Campbell from New Zealand was talking about some of the technology he's employed, particularly around water and soil sciences. But taking sustainability to another level and thinking about business, true business sustainability, is the next challenge, I think, for our New Zealand farmers, and some of them are sitting here in the audience, where no amount of money perhaps will solve some of the environmental challenges that we are facing. And I'm particularly thinking about parts of the Waikato or Canterbury, for example, where we are tapped out, so to speak, in terms of our resource use. And so New Zealand, I actually think, is on the precipice of transformational change when it comes to agriculture. I think that'll be the next chapter in our story, and Weber talked about that when he opened around the agricultural revolution that's been happening for the last 50-odd years. This is the next chapter. And I think that transformational change looks like farmers considering what is the alternative land use available to them. Land use change, absolutely. So for example, some of the conversations I'm having now with clients and farmers is, what else could I be doing? In addition to what I'm running here on farm, in terms of a dairy farm, it could be diversification into some sort of cropping arrangement. Or alternatively, looking at getting out of dairy full stop and moving into something a bit more innovative, like sheep milking, where there is a lighter environmental footprint and perhaps less onerous social license to operate frameworks.
Less onerous social license. They're starting to feel it, are they?
Well, in the dairy space, I think certainly that pressure is there. And we're seeing this play out in a number of ways. And I think dairy companies now are trying to take the forefront in managing some of the supply quality controls to help with the social license to operate. But essentially, we're talking about new, innovative industries, relatively new, that can set their own frameworks. And so that poses a whole raft of opportunities for some potential producers out there.
Look, I'm going to ask you all, I'll probably do this in the next panel because I find it very useful on panels. I'm going to ask you all a sort of final question. If you had a lever to pull that would change things for the better, what might it be? And it's not a question about describing the issues for me again. I want it, it's an invitation, it's an action, something that you could actually do realistically that I think it focuses the mind, that would in fact improve the possibilities for farmers. This is what we're here to discuss. So what would you answer, Frank?
I think it's branding.
Right.
I think transforming your meat product from a, quote, commodity to something that you can actually pull pricing from will enable all producers to have extra capital in their ecosystem, and we'll be able to change, the way that they run their business. So I think it's like fundamental to the industry's success is actually a bit of marketing and branding associated with the product, because it is a really high quality product by and large. And so people should spend more time and more money on creating that sense of provenance.
Dave?
Yeah, mine's aligned. It's flipping it's flipping this magical switch from a volume mindset to a value mindset. So that is shifting from a mindset of how we produce more from less inputs to actually earning more from less, if that makes sense. And that's about rewiring your value chain to appreciate the intrinsic value that's associated with product rather than just the protein itself on a commodity basis.
And how would you actually sell that? If I ask you what you would do, like how would you sell that?
I'd do that by connecting consumers through to the producers and making sure that there's a very, very clear and distinct understanding about what it is the consumer wants and what it is the consumer is willing to pay for.
Righto. And so, Rory, how would you loan more money out? What?
We might think slightly higher up. We know that some work done by ClimateWorks based out of Melbourne basically said that if we want to get to net zero carbon, net zero emissions by 2050, we will still be emitting, last year we emitted 560 million tonnes odd. In 2050, if we apply all the technologies that we have, we will still probably be at emissions of 250 million tonnes. Then this is where land comes into the picture. We have to sequester carbon in the land, and it goes to land use change, etc., of give or take 250 million tonnes. None of us know what that looks like. So I would bring the concept of soil carbon to the fore, get the science of soil carbon, sorry, my Irish accent came out there, to the fore, and basically push that a lot more, and that's a win-win for the farmer because it improves productivity, yield, quality, it makes the land more sustainable, and it reduces emissions. So we would fund soil carbon to a greater extent because today we don't. Because
the media would be very sceptical of that.
We can't find.
Which is very interesting.
The last comment I would make is that the science needs to come to the fore on soil carbon.
Yep.
Because today it's not quite where it needs to be.
Very interesting. Emma?
Well, I think I'd sort of ties it all together, but particularly extends off Frank and Dave's points. And it's a message really for our farming community, and it's really to walk the talk. We've talked about value adding and brand development, and that's all well and good, but we need to really make sure that that whole provenance story, or that the story along the supply chain, is being adhered to right at the farm gate and throughout. And so my message really is for farmers to I understand and I appreciate that there are higher production costs and production standards that are being imposed on our farmers, but really to fall in line with that and use that to their advantage in order to really allow some of these guys to I guess, sell the brand off the back of that.
Okay, very interesting. Look, thank you very much indeed. I'll take that away with me and consider it in all my various thoughts. So would you, ladies and gentlemen, would you please thank our guests this afternoon? Thank you.